Hi, this is Nikhil Dhawan from Intero, and today's topic of discussion is very near and dear to investment property owners. We are going to chat today about 1031 exchanges and the advantages, and for that reason, we have with us today Ron Ricard, a VP at IPX, who's also a strategic partner with Intero Real Estate. Welcome, Ron.
Thanks, Nick, for having me. My name is Ron Ricard with IPX 1031. We are the nation's largest qualified intermediary. We help clients do what are called 1031 exchanges.
Ron, just to keep it simple for our audience, what's a 1031 exchange?
So 1031 is just a section of the tax code that allows you to sell investment real estate, buy replacement investment real estate, and in doing so, you get to defer paying taxes on the profit that you've made. So a simple example, you have a rental house, you're tired of that, you want to go buy a duplex, so you list the property. At the close of escrow, the money comes to a third party called the intermediary, that's us. You then go and find the replacement property, and we send the money to the title company on that side. So you're selling investment real estate, you're buying investment real estate. And because you didn't touch the money, because we had it, you get to defer paying taxes on the profit that you've made.
Thank you. Why do people use 1031 exchanges?
Well, the people who use 1031 exchanges obviously are people who own investment real estate, because what you're selling and what you're buying both have to be investment real estate. But you don't do a 1031 exchange in order to just defer the taxes. Because if it was just a matter of deferring the taxes, you just wouldn't sell the property. The reason people use exchanges is that they want to put their money into a better property. And better is very subjective. It means whatever the client wants it to be. It could be, I want to go buy something that gives me more better cash flow, maybe less maintenance, maybe because I'm moving, I want my properties to be closer to where I'm moving to. So the key is people do exchanges because they want to buy something better than what they own today. And 1031 is the great tool that allows you to get from what you own today to what you want to own tomorrow without having to pay the tax man every time.
Now, what's happening in today's market with respect to 1031 exchanges?
Today's market is very interesting, and I will say we are doing more exchanges today than we ever have in the past. So there are a lot of people doing exchanges, and I find it interesting because I think there are a lot of things that are contributing to what's happening. First is, with low interest rates and very little inventory out there, prices for real estate, as you know, Nick, have gone really high. And especially in markets like the Bay Area, you get to a certain point where you have a very expensive property and you're not collecting that much rent on it. So I think there's a real incentive right now for people to take advantage of this high price and reposition their money into assets that are going to make them more money. So I'm seeing a lot of people reposition themselves into commercial real estate, into apartment buildings. We hear stories about how a lot of people are leaving the Bay Area and leaving California. Well, I'm seeing that in their exchanges also, where a lot of people are exchanging outside of the Bay Area where they think there's going to be better cash flow. In many cases, they are moving money outside of California entirely. Sometimes it's for cash flow purposes, maybe political, maybe it's because they're going to go somewhere else themselves, relocate. But the bottom line is, it's a very active market right now for 1031 exchanges, and there's not a lot of inventory no matter where you're going. So it's a process you want to plan for.
Lastly, this is one question I get asked a lot. Have the 1031 exchanges been impacted by Prop 19?
Yeah, Prop 19. I am getting lots of questions these days about Prop 19 and 1031 exchanges. The first thing to realize is there is no direct connection between them. 1031 exchanges has to do with deferring state and federal capital gain taxes. Prop 19 has to do with property taxes, so they are not related. Also, when you look at Prop 19 itself, it has two basic components to it. The first is it allows you to transfer your property tax basis to other properties, but only your primary residence. Again, 1031 is for investment real estate, and so has no connection there. The other aspect to it is it really restricts the parent-to-child transfer when a property is sold to their children or more likely to inherited by the children. In the past, not only was a primary residence, but other investment real estate could also be transferred. Now that's not the case anymore. But all that really does is it just increases the property tax base for those people who've inherited the property. Again, has really nothing directly to do with 1031 exchanges or investment real estate in general.
Thanks, Ron, for all the great information. It was really valuable, and I also learned a lot more about it. If you would like more information from Ron or myself, please contact me. Thank you.
Thanks for having me, Nick. Yes, my contact information is below. Anybody is welcome to contact me with additional questions. Obviously, we didn't get into the details of the rules about the 1031, but that's okay. We can do that when you call me.